Welcome everybody to the Genus Weekly In Focus video. This is the 26th edition of this video, which is a milestone recognizing that we have been doing this now for 6 months. It's hard to believe we're 6 months down the line from this, and so much has happened in such a short amount of time, Wayne. And yet it feels like we've been dealing with it for quite a while now. My name is Thomas Irwin. I'm an associate portfolio manager here at Genus, and I'm celebrating my 2-year anniversary just last week. And with me is our CEO and Chief Investment Officer, Wayne Wischel. Hi, Wayne.
Hi.
Today is Friday, September the 11th, and I'd be remiss if I didn't say that it's been 19 years to the day since the attacks at the World Trade Center. We'll talk more about that. I've got a question for you related to that. But I want to first talk about the week that was in the markets. Volatility has returned starting late last week. We've seen sort of a 7%, at least in the S&P, 7% from the high last week to the low this week, and it's kind of been bouncing around a little bit. What are your thoughts around this volatility and what sort of precipitated that?
Well, first off, we're in the seasonally weak part of the year, in the late August, September time period. So we normally get some weakness in September. What happened over the past week really was just the tech sector basically taking a bit of a break. And it got way ahead of itself. It ran up. It was like 15% ahead of the 50-day moving average, about 25 ahead of the 200-day moving average. It needed a bit of a rest. It's getting it right now. And so it's coming back down to earth here with a bit of correction. It dragged down some of the other stocks as well, but that was the area that concentrated. Those big FANG names were all off around 10, 12%. So it was a correction I think much needed.
Yeah. Ahead of this last week of volatility, or as a result of it, have we made any changes in the portfolios?
Well, in our August rebalance, we took some equity monies off the table, not a lot. We took some off and put them into some of the credit product, into the corporate bonds and high yield bonds. As well, in our rebalances, we've been shaving technology. It's been doing so well. We've been shaving for our semiconductor weights, which, like every month for the past months, we've been shaving semiconductors. And we did some more of that as well. And we did some more of that even after this correction here. So just getting the portfolio more diversified into some of the more beat up value areas or economic sensitive areas, and moving the money from tech into those areas.
Yeah. Back to 9/11, that event is obviously an event that everybody remembers where they were when it happened. Here we are 19 years later, and while it's not a one singular focused event, it's certainly going to be a time that everybody remembers for the rest of their life. And I just wondered what, if you look back over the years of the firm, what has Genus learned, implemented? How have they sort of helped clients navigate through these difficult times?
Yeah, we have, we've always had a quantitative modeling based approach, and we've always been improving that over the years with better technology and just better ideas, and expanding our degree of modeling. And I know during the 2008 crisis, we said, prior to that, we were focused primarily on stock selection. We weren't making any kind of big sector moves or asset mix shifts. We just said we have to do more macro type research and modeling. And we started doing that, building our Dynamics platform to do more macro modeling. And we've been doing that. And through the course of the past, since the Great Recession, our team has been focusing on some new areas in terms of looking at style rotation. And as you're aware, that value has been underperforming now for years, and growth has been there. We've been doing a lot of work on that, even pre the crisis. And going into the crisis, we were doing some work on the economic sensitivity of stocks and being able to distinguish good value stocks and sort of bad value stocks predicated on their economic sensitivity. And that work we did really helped us during the past 6 months in terms of what stocks to avoid and what stocks to go into. And so I think having a better understanding of how the macro environment impacts our stocks is going to help us going forward. I think if you're a manager, if you don't understand that, yeah, you're going to get hurt.
Well, I know it's one of the big reasons I joined Genus, and I know I've talked to some clients who really like that part of what we do, and that's a reason why they're with us. Let's shift to the COVID, the pandemic. Kids are back to school this week, some of them, and I know that has a lot of parents, teachers, kids themselves with anxiety. If you just kind of look forward a bit, and this is kind of the event that we've all been waiting for over the summer, what happens in the fall when kids go back to school, the weather turns, and flu season ramps up again. What do we see as a potential risk to what's happening right now on that front?
Well, we've seen conflicting research on this, on the school event. And most recent I've seen is that kids aren't super spreaders. That's good news. I think there will be individual outbreaks. They'll have to shut those schools down or freeze them for a couple of weeks. And I think we have to find our own way and adapt and change. And I think we can do this. And I think the market is saying that too, that we can actually adapt and work our way through this issue. And I would say one thing in terms of, there's a lot of concerns about the flu season coming up. Well, if people, adhere to social distancing and masking and everything else, that's going to help mitigate the regular flu season. Something we've never done in the past, right? So it's going to have an effect on both the flu and the COVID. So I think it's we can do this, is what I'm saying.
Yeah, I know Dr. Bonnie Henry has come out and said that they wouldn't. There's very likely to be a sort of a wide shutdown of schools, that they would maybe shut down pods if there was outbreaks, right, or a particular school, but not a province-wide kind of thing. And similar to the economic front, we're probably not likely to see a global shutdown again of economies and whatnot.
Right.
I had a client ask me this week, actually, is now a time to invest with everything that's happening, pandemic related, socially?
Well, there's always things to worry about, that. And the old saying is the market climbs a wall of worry. And so, what else is new? But there's been massive changes that we've seen over the past 6 months, and more coming as we go to this new era. I would say typically my advice in terms of investing right now, we're in the seasonally weak period right now. I'd say hold back investing, maybe put some of your money into the market right now, and then wait till we get through the seasonally weak period through the end of October. And you might want to wait till post-election time for the rest, I would say, just in terms of, will there be a surprise? Will Biden win? We're not really sure what his agenda is. Right. So I would say start going in over time. You can put some in now. I'd say we had a bit of a correction. Put some in now, yeah. And then wait. I would say wait through the seasonal week period, and post-election, I'd get invested, predicated on what we see in that period there.
Thank you. So in closing, I'd like to thank our CEO, Wayne Wischel. Thank you, Wayne. I'd also like to thank our clients for their trust and their continued business. I'd also like to thank our prospective clients for taking the time to watch our videos and be curious about Genus and consider possibly hiring us. Lastly, if you have any questions about this video or you wish to review your portfolio, please contact your portfolio manager. Thank you for watching and enjoy your weekend.